The U.S. labor market is nearing full employment. That's our top story today on the Wall Report. I'm your host, Greta Wall. Payroll firm ADP reporting today the U.S. private sector added 455,000 workers in March. Now that beat expectations for 450,000, but it's also the slowest growth since August of 2021 as the pool of available workers continues to shrink. The leisure and hospitality sector continued to lead those gains, adding 166,000 workers. And the growth was widespread across businesses of all sizes. Companies with less than 50 employees, or small businesses, added 90,000. Those with 50 to 499, your mid-sized businesses, added 188,000. And then your large companies, those with more than 500 workers, added 177,000 employees. Now, meantime, the U.S. economy did grow at the fastest pace in 37 years in 2021. The Commerce Department's final revision shows GDP expanded 6.9% in Q4, down from the previous reading of 7% growth. Now, that revision comes as consumer spending rose just 2.5% versus the previously reported increase of 3.1%. So that puts full year 2021 GDP growth at 5.7%, which is the fastest calendar year growth since 1984. And as the economy continued to expand, corporate profits hit a record high. Adjusted pre-tax profits at U.S. corporations jumped 0.7% in Q4 to a record $2.94 trillion. And for the full year, those profits surged 25%, which is the largest gain since 1976. And that strong gain does come, though, after profits fell in 2020 amid the pandemic for the first time in 5 years. And while traders digest that new economic data, the market is taking a bit of a breather. The major indices are all lower in today's session, with the S&P falling for the first time in 4 days. But oil prices are rebounding on new supply concerns. West Texas Intermediate crude futures are up 4% to over $108 per barrel. Brent crude futures rising nearly 4% to over $114 per barrel. And this comes after the American Petroleum Institute reported crude inventories in the U.S. fell by 3 million barrels in the week ending March 25th. That was triple what analysts were expecting. The market is also continuing to monitor Treasury yields. The 10-year Treasury yield is down about 3 basis points today to 2.37%. The 2-year yield also down about 3 basis points to 2.34%. Now that puts the spread between those yields in positive territory, but that curve briefly inverted on Tuesday for the first time since 2019. The yield on the 2-year Treasury note was slightly higher than the yield on the 10-year Treasury note at one point in yesterday's session, and that is seen by many experts as a big warning sign of an impending recession. Meantime, mortgage demand is falling as rates continue to soar. And new data from the Mortgage Bankers Association shows the average 30-year contract rate jumped to 4.8% from 4.5% last week. That's the highest rates have been since 2018. Overall mortgage application volume did fall 6.8% for the week. That was led by a plunge in refinance applications, which tumbled 15% weekly and 60% year over year. Purchase applications, though, did increase 1% weekly, but fell 10% compared to a year ago. And these higher rates are making affordability even more difficult for buyers who are already facing prices at record highs. In earnings news, BioNTech shares are rallying today after beating Q4 expectations. The German biotech company reported adjusted earnings of $13.55 per share on $6.16 billion in revenue. Now, both of those numbers have been converted from euros, and that topped analyst expectations on both the top and bottom line. BioNTech did announce a $1.5 billion stock buyback over the next 2 years and said it plans to propose a cash dividend of €2 per share. The company reiterated its 2022 guidance following that strong quarter and said it expects COVID vaccine revenue between $14.5 billion and $18.9 billion this year. Lululemon shares also rallying today on strong guidance. The stock is up more than 9% so far in the session. The athletic apparel retailer reported adjusted Q4 earnings of $3.37 per share on revenue of $2.13 billion. and that beat analyst profit expectations, and revenue was up 23% year over year. Now, Lululemon also forecast full-year fiscal 2022 earnings between $9.15 and $9.35 per share, with revenue between $7.49 billion and $7.62 billion, and that crushed Wall Street's expectations. The company also authorized a $1 billion stock repurchase program. Meantime, Micron shares are up just slightly after the chip maker did top fiscal Q2 expectations. Micron Technology reporting adjusted earnings of $2.14 per share on $7.8 billion in revenue, and that topped the company's previous forecast. Micron then forecast fiscal Q3 revenue of $8.7 billion and non-GAAP profits of $2.46 per share. That was better than analyst expectations on both. Meantime, Apple shares are not looking like they'll notch out a new winning streak. Shares are falling slightly today for the first time in 11 sessions. The tech giant notched that 11-session win streak on Tuesday, which is its longest since 2003. The iPhone maker's market cap is now nearing $3 trillion again, after becoming the first publicly traded company in U.S. history to hit that milestone on the first trading day of the year in 2022. And coming up, we have the Fed's preferred inflation reading. The Bureau of Economic Analysis is set to release the Personal Consumption Expenditures Index tomorrow morning. And that index includes the Fed's favorite inflation gauge, the Core PCE Price Index. Economists are expecting that to show core inflation pressures jump to 5.5% in February from 5.2% in January. To get the breakdown of that data as it is released tomorrow morning, be sure you're subscribed to my Coffee with Greta newsletter. There's a link in the description box to sign up. I'll see you all back here for the Wall Report tomorrow. Don't forget to subscribe before you go.